every liquid fund I talk to tells me this is an easy, 4x, right? Or it's going to trade up to 10, it's going to trade up to 12, and then we're going to dump it. We're going to trade out of it. All of them are saying that. And if every single one of them saying that, all $740 million worth, and that represents, call it 20% of the supply, right? What actually happens in that case?
This episode is brought to you by Geodnet, the world's largest decentralized RTK network delivering real-time, centimeter-accurate positioning around the globe. You'll hear more about them later in the episode. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to the Roundup. We have Santi, and I heard that this guy Rob was trying to replace me last week, so
we had to include you this week.
This is a hostile takeover of the Empire Pod.
You guys are sitting on this side of the table.
The barbarians at the gate are just.
I know, honestly. I would like to note that, Santi, you have 2 coffees.
Well, we're trying to get for a sponsor. Times are tough, ladies and gentlemen.
Here, look at no free ads unless it's
no free ads. we like Cologne.
Yeah,
there's maybe I'm not doxing the location of the office, but Blank Street's pretty good.
But why do you have 2 coffees?
Because optionality.
But why does one have milk and one's black?
Because I want to sip, and as you'll see me through this,
you're actually sipping both of them at the exact same time.
I woke up at 5 in the morning. I woke up I like having milk in the afternoon, but since I woke up at 5 in the morning because I'm jet lagged.
Such like a child thing.
I mean, I've been doing this. How long have I been doing this podcast?
I like warm milk in the mornings.
It took you not only 6 years. We've been doing this, 5 years to understand that I'm a child.
Yeah, that's true.
I think truth is coming out.
Yeah, it's coming out.
All right, shit.
Rob, is your Starbucks name Thicky?
It might be. I think this is Eunice, honest.
Eunice.
Yeah. Okay. So, but
nice.
It's a quad. So as you can tell, I also was up at 5. So.
Yeah. I know. It's been a big. I rarely drink. You can tell how tired I am by how many Celsius I'm drinking. Usually I have no Celsius. But
how many have you had today?
No, I just ripped one yesterday. It's my 2 iced coffees in Celsius. It's been a big week. What are we talking about today? Big week.
Big week for coffee.
Big week for coffee. Let's. So here are the things that were on my list. Polymarket UMA debacle. There's a million
Zelensky suit.
Zelensky suit.
$200 million on the line.
Yeah, exactly. A bunch of prediction markets are raising, so we could talk about that. A bunch of treasury vehicles. They keep coming out. A bunch of acquisitions this week. Rally, Vertex, Portal. Monad acquired. Yeah, Portal. Pump.Fund ICO.
Yep.
Rob, where are we starting? Because this is your show now.
All right, let's start on the Pump ICO. I think that's what people want to talk about. Pump ICO, right? Yeah. Listen, so doing it on a Saturday is a little bit interesting. I actually think that's
very retail.
Zoom out. Give the context for Pump.
So, I mean, the context for Pump, right? I mean, everyone knows what Pump does, right?
Are you guys an investor?
No.
Yeah.
No.
Full disclosure, I am.
You are.
I am an investor.
I mean, there's not actually that many VCs in Pump, right?
Sixman is the biggest.
Yeah, so Sixman did it. Alliance DAO did it. There's a bunch of angels like yourself. They actually looked at raising a round, called a year and a half ago, and almost did from a couple of VCs. There was some. Like
the good investor I am, I passed on the $20 million value round.
Yeah, well, that's why Santi's the investor, and you run the media company.
Behind the podcast,
I am too.
No, but so they haven't raised a ton of capital, and then essentially, I mean, I think as everybody knows, right? They last March, it just blew up, right? And now it's the biggest protocol and the biggest application on Solana by magnitudes. It's done, I think, $700 million of revenue.
Shy of 700, but
yeah. So
I mean, it's a most profitable protocol in crypto. How much is Hyperliquid cranking these days?
It's the fastest company in history to 700 million in revenue, crypto or non-crypto, in the history of.
And they have a fraction of the workforce.
Yeah.
Another normal company. How much is Hyperliquid run right now? 200, 300?
I think it's a little bit higher than that now. Yeah. But depends on the week. But market share just continues.
So Pump.Fund's ripping for fastest company in history to 700 million in revenue. They a couple months ago start doing this fundraise, right? Out of $4 billion, they say we're raising $1 billion at $4 billion.
Yep.
Yeah. What did that look like in the private markets?
I mean, they talked to every single VC. There was a lot of interest. And I think as you saw yesterday, they went through the token economics. If you back into the numbers, they weren't explicit about it, but it's about $740 million worth that VCs and institutional allocators bought. And then the other, call it 260, is going to retail through these launch pads.
And you guys, why didn't you guys do it?
We don't really see it as like that we're the right pool of capital for that. So we talked about this a little bit earlier offline, but there's things that are long-term games for long-term people, short-term games for short-term people, and our perspective is when you do these kind of like unlocked like launchpad type deals, most of what is happening is people are trading in it. They're hedging pretty quickly, and so we try to make really multi-year and maybe decade-long bets, and we do that. Also, we try to do that at relatively early stages. And so we don't typically participate in these things that are, call it, multi-billion-dollar valuations. I actually think if you look out over the last 3-4 years, the worst venture deals in crypto, especially the token deals, have been the ones that have been done at $1 billion, $2 billion, $3 billion, even for the most hyped protocols that have raised a ton of capital. And so we try to take a very strict view of how we invest, and we try to really be, call it that seed through Series B, but that also means, call it, 0 to like $300, $400, $500 million valuation, not these multi-billion-dollar valuations. But listen, I think it'll do well.
Yeah, I mean, like Hyperliquid's trading out with the 30 billion.
It's at 41 billion this morning.
41 billion.
Yeah.
Why can't Pump 10x?
Well, listen, the treasuries are a little bit different, right? So like you saw it last week, the bonk launch pad, at least for a period of time, actually took the leading spot. Yeah. I think back this morning, Pump took the leading spot again, but it's like 45-ish% market share right now. They're raising a ton of capital. They're going to have this war chest. They have a story around just like democratizing access to raising capital. And the story around all types of media, all types of entertainment creators can raise capital, and I think that's like super interesting, and it remains to be seen what they can do. But it is on a different trajectory, and it is a business that is going to have a lot. The moats aren't as deep, and it's going to have a lot harder time competing, or it's going to be a more competitive market than I think Hyperliquid is probably going to be.
I guess like if I were to like remove myself from obviously my bias. Both are very financial products. Like the user base is marginally like I think like Hyperliquid skews a bit more whale, like larger ticket sizes.
But that's typical for trading.
Yeah, typical for trading. Pump is more retail. They are launching their own chain, so we should talk about like the implications for Solana, because at one point, pull up the dashboard for Blockworks Solana. Pump contributed at the peak like 2/3 of the revenue for Solana, which is. We've talked about this at length in the podcast, which is how do you value these at once? Like, how do you then re-underwrite your thesis on Solana? Does that mean that someone else takes a slot, like Bonk? Does anyone else come in? And what are the true moats for these chains, right? Whether it be Hyperliquid or Pump. I mean, this is something that I tweeted about this the other day, which is like moats I think are generally overrated, and as is first mover advantages. But like, what happens in a world where if you're a protocol that is sitting on top of Ethereum or an L2 or you see Pump and you see them launch their own chain and they're widely successful because they own the user, they have the brand, and then they expand in other verticals. What is like how do you like then form a view around which tokens to allocate, where to buy?
Yeah.
You know what I mean? Like, because to me that's like the thinking ahead of like what other teams want to do this and basically rage quit Solana.
Yeah, I have thoughts on maybe Solana, but before going too deep into what it means to the chains, what do you guys think? So this Pump ICO, the Pump ICO is on Saturday. Right? Yep. So we're recording this on Thursday. Episode goes out Friday. ICO on Saturday. What is this? What actually happens?
So if you look at
and importantly, to understand that, we have to think about what's the vesting and who's locked up and who's not locked up, and who can actually sell basically.
So everyone who is participating in this round, I think can sell immediately. Right. And so it's a billion.
So you could invest 2 months ago and then you could sell immediately.
You can sell immediately on TG, right?
You would have invested at.
No, I mean people just. I think they just funded like recently, so it wasn't even 2 months ago that people funded.
And I'm looking at Pump on Hyperliquid right now. So there's pre-markets on Hyperliquid.
Yeah, it's like 5.5, right?
5.5 billion.
Yeah.
Right. Is this going to be another circle scenario where people are overthinking it? And
that's my take.
Well, I will say this: every liquid fund I talk to tells me this is an easy, 4x, right? Or it's going to trade up to 10, it's going to trade up to 12, and then we're going to dump it. We're going to trade out of it. All of them are saying that. And if every single one of them saying that, all $740 million worth, and that represents, call it 20% of the supply, right? What actually happens in that case?
How much volume?
You start wanting to front run the other funds because
Correct.
you're saying everyone's selling at 10. We should just take chips off the table at 8.
Yep.
Right.
I mean, and so I think there's a real question around the dynamics here. So my guess, and I don't know, I'm not a trader, this is not financial advice, is it actually does stagnate a little bit at, somewhere above the 4 billion, but that it doesn't have this, huge run that people might think.
I just looked up the short interest on this.
Wait a minute, hold on. Rob's just told he's not a trader. Like, okay, Rob, we'll close shop now. Like,
you can get paid 1,800% APR to short 5.5 billion FDV right now in pump on Hyperliquid.
But like, okay, objectively, so let's look at the stats, right? It's assuming that the revenue met is all the rage now these days. So like, if Pump is doing 700 million of revenue, now you got to assume, okay, what's a forward-looking stuff? Is it 700? Is it 200? I don't know. But on an LTM basis, if it's at 4 billion and it cranked out 700, the revenue share is actually quite interesting here because
that's true.
What made Hyperliquid, right? A lot of it is like they're like the buy and burn, right, mechanism, which is pretty substantial.
Yeah.
So Pump has that as well. And so this is like, if the market is objectively looking at Hype, because to me, that's the comp. Different set of like users, but like Hype and Pump, the scenario for me is, there's like a lot of this like volume that is people gonna want to try to trade in and out of it, and there might be noisy in the first couple weeks, but could this be at 40 billion, 30 billion? And where's the liquidity come from?
So I think the fundamental story is like clearly there, right? And this is the story that you're talking about. I think maybe what Jason was asking, or that's what I was responding to, is more around what happens in the short term trading. I heard from a couple of funds yesterday that they were surprised that so much of the $1 billion was going to funds, as they had been at least told, or they thought that it was going to be significantly less than that, call it like $200-300 million was going to go to the trading funds. If that was true, there was an expectation that there was going to be a lot of buying at open from people who got crammed down in terms of their allocation. Mm-hmm. Now I think there's like some concern that pretty much everybody is allocated in some way. Mm-hmm. But the fundamental story is clearly there if they continue to keep market share. They are competing now with Bonk on the share with the creators. So Bonk actually gives more back to the creators. And if that competition heats up, like there is necessarily going to be less revenue for like the buy and burn mechanism. Yeah. But, it's going to be, I think, a very profitable company. They're going to continue to do well. And I think there's a real fundamental story to your point.
Who did they acquire? Do you know?
I don't.
No, I don't know. Yeah. I will say like Noah, we haven't had him on the pod, but they're just, I've met a lot of founders in crypto and outside of crypto, and he's just one of those just like a true savage. And he's he's like 21.
This episode is brought to you by Geodnet, the world's largest decentralized RTK network delivering real-time, centimeter-accurate positioning around the globe. Powering technologies that enable precise navigation for drones, autonomous vehicles, first responders, farmers, and robotics, Geodnet shows that blockchain can be a truly transformative force. By delivering real-time centimeter-level accuracy, Geodnet enhances emergency response, boosts construction precision, and enables advanced navigation for drones and surveyors far beyond the limits of standard GPS. To find out more, click the link in the show notes or follow them on X. Hey everyone, Jason here. Earlier in today's episode, you heard me mention the weekly CIO Memo from Bitwise. In an industry as hectic, fast, and complex as ours, it's incredibly hard to get an easy, no-nonsense stream of what's actually moving crypto. The memo comes from Matt Hogan, Bitwise's Chief Investment Officer. He's been on the show before, and he has this amazing ability to take the most complex topics and break them down with clarity. Trust me on this one, the Bitwise Weekly CIO Memo is really worth the 5 minutes of your time. Check it out at bitwiseinvestments.com/CIO memo/empire, or just hit the link in the description of today's episode to get started. Carefully consider the extreme risks associated with crypto before investing. As always, investments in blockchain technology involve risk, terms, and conditions apply. So what do you think of that? You compared them to Hyperliquid. The difference is they have a very different. So I was talking to the CIO of a big financial institution the other day, and they are studying Hyperliquid. They're studying perps. They're studying Hyperliquid. They are not taking Pump seriously. And it was interesting. Pump is in their tweet announcing the ICO. They said, "Our airdrop coming soon. Our plan is to kill Facebook, TikTok, and Twitch on Solana. What do you think of this, like, kind of the creator strategy? Because it's not a capital market. Hyperliquid is dedicated to capital markets. Perps, expanding perps, bring stocks on chain.
You remember that episode we recorded when they launched video? And it kind of backfired because it was like...
Yeah, but now they have video again, actually.
They have video again, and Noah would tell you, look, we just have to hire a bunch of people to like curate the stuff. Mm-hmm. The hyper bullish case for crypto is like, if you look at objectively TikTok, all these platforms, the user-generated content, clearly creators are not getting enough share. And so can someone displace them? And of course, distribution is king. Like at the end of the day, if you're a creator, you're going to go to YouTube because that's where the eyeballs are. And it's really, really hard to displace. But you have like ByteDance that, in 4 years, like has really built distribution and clearly caught. Yeah. But of course, you don't talk about the other 100 type of TikTok, things that didn't work out. They're raising a lot of money. I think they're really good builders. They clearly hit a nerve in crypto. The question is that going to resonate with creators? The bull case here is they'll share more of the economics to a creator. What you're saying, I think the biggest challenge for them is the perception thing, right?
Well, I think there's another point here, though, which is simply that the financialization of everything continues to happen, and especially continues to happen in Gen Z, right? Like if you go and talk to, this is even an outside crypto point, you talk to the Zoomers, and now I sound old by using the word Zoomers, but they, there's this perception that you either have to do one of two things, which is like you have to gamble if you're going to make it, or there's like a lot of just opting out altogether and saying like I'm going to be a plumber and like I'm going to just not be part of typical like the grind, right?
Trade school applications are at like a 40-year high.
Yeah, exactly, right. And so this is the point. And the way and people are doing more content generation because people are actually making a lot of money doing content generation in a way today that you couldn't in 10 years ago, right? And that kind of financialization of content generation, financialization of our lives, like that continues to just like go into every part of the way we live. And I think that is the bet on Pump as well, and you're going to see that bet on other platforms. And I think there's probably going to be, to your point around, okay, well, this fund wasn't taking Pump seriously. I think some of it is generational, right? Like there is just like the older fund managers don't understand how the younger investors are thinking about the world. But also the point is that the younger investors have less money than the older fund managers too. And so there is that dynamic as well.
Jason, you're a media company. How do you think about like, can they actually, what is a hyper bullish case probabilistically like to displace and become like the next TikTok?
That we're actively considering moving stream. So like podcasts we think are we love the channel of podcasts. It's all going to streaming. Streaming is like the clear next evolution of this. Like if you talk to like the folks who I consider to be the best media companies, like the Barstools of the world, it's all streaming. People have probably, you guys have I'm sure seen like TBPN. Have you seen this tech show? Yeah. It's like that. That's the model. The model is like, on one end, like very long live streams that are like, because what live streams have is authenticity. You kind of just jump on, like you're kind of shooting the shit. Yeah, it's like, it's just very casual. And then on the other end, it's like hyper optimized for social short clips. And that's the model. So actually, this is like Blockworks' H2 like podcasting, more live stream, more short clips, less like these hour-long podcasts. Is like this model's a little outdated, I think. So it's all going streaming. If Pump can be the we're not thinking about Twitch. Twitch is not we don't even talk about Twitch in our like streaming conversations. We don't really even talk about YouTube that much. It's all Twitter because Twitter is where our audience is. So if more people move on chain, the audience is on Twitter, but is the audience also on Pump? So we're actively thinking about, do we live stream on Pump?
I guess like from your genius brain in media, what does the product look like for Pump? Like when they say they want to displace these platforms, like what does that format look like?
Yeah, I don't know. You need to get people doing something on the platform that's not just trading. That's the problem. It's both a pro and a con, because I don't want our streams to be hyper financialized. But this might just be so you had permies for permissionless,
right? And what was the learning there? Because that was quasi venturing into financialization territory, right?
Yeah, and that was not. Those were nuts, right? Rob, you ever heard our Permi story?
I didn't know.
Yeah.
This is the first time hearing it. I'm sorry.
You're going to have to buy a Permi if you want to be invited back.
Permis were 2022. We had permissionless. We launched these things called Permis as our VIP ticket for permissionless.
Okay.
We launched them, 555 of these at 0.11 ETH each. So, you know, I forget what ETH was. Let's call it $3,000. So let's call it $300. They ran up to 30K.
Oh, wow.
30K a Permi. And,
which, by the way, like that got access you to permissionless. A permissionless ticket's $1,000.
Yeah, I mean, it got you at 30,000. It wasn't a good, you know, thing to buy to get access to permissionless. Now they're trading like it's actually a good ARB. You can buy it for cheaper than permissionless ticket. But
I'm gonna go buy one after this.
It's good. Yeah, exactly. But it was not an enjoyable experience having a bunch of people just like hounding you, saying, why isn't the token going up, basically? Yeah. So that was our mini experience of having a token. So I was talking to one of the 6-man guys, Carl, who runs, I think he launched the first stream on Pump Fun. And it's like, everyone's in the chat just being like, when token go up, when token go up, when token go up. And you actually want people to be addicted to your content, not addicted to your number go up ability.
Yeah. But I think there's also a point here. If you look at like online casinos, and I mean, we talked about Twitch a little bit, and you said I'm not Twitch, but people are sitting in like on Twitch and they are just watching people play slots all day long, right?
Totally.
And there are thousands of people doing this, right? And then they're playing slots alongside of them. And then they're doing this in poker. And now they're doing this in video games. And like there's like streaming has become in almost every form a financial platform, right? And this is why I think like it makes so much sense for Pump.Fun is because they'll have the streams and it will be financialization alongside of it. And I think that is now the expectation of people who are a decade younger than the three of us, right? That there is an expectation that we can do something else, but to do something else.
Okay, so this is interesting
financial.
Is that people treat, so I was talking to a bunch of, you know, we have a bunch of like 23 and 24 and 25-year-olds at Blockworks, and I was talking to a lot of them at permissionless. They don't, and they trade and stuff like that. They don't treat it as like they don't treat it as investing. They don't even treat it as like the money making. It's entertainment and it's a game.
Yeah.
And they all just see themselves on a leaderboard against their friends where they're like, yeah, you know, I made a 30x. Oh, this guy made a 40x. Oh, he's on top of me right now. But like, and there's like, Pump is kind of combining a couple different things. One is everybody has a second screen right now and everyone's scared of being lonely. So that's why streaming is booming.
Yeah.
Streaming is booming right now because you just want this second screen up where you've got someone in the background, like alongside you, right?
To this point, I had like a 25-year-old founder, has only ever worked in crypto, actually went to Harvard. I had this person in the office yesterday and they asked me, what is the best game in crypto, do you think? I was like, you know, I didn't know what they're talking about. So I was like thinking actual video games.
Trading.
And they said Hyperliquid and
memes,
Pump, right? And like everyone refers to this.
Yeah. Haseeb was the first one I heard talk about this on that episode with the Vichel, where he's like, there's always been, we were because this was when gaming was really big.
Yeah.
Gaming as a narrative. He's like,
DeFi,
the thing they don't understand.
Hella fun. I mean, my God.
DeFi,
I had the best time of my life.
DeFi Summer was the best game crypto's ever produced.
Like
actually, memes.
Yams.
I mean, I haven't really played the meme game as much, but like memes for those who have played it, that's the game.
Yeah,
that's the entertainment.
Yeah, I think like my learning from because of course at Parify we were super early in yield farming, and that was super fun. I mean, Yams, was very very fun. And then you had the Axes of the world, and I think where I draw the line is as long as people know the rules of the game, it's fine. The problem with gaming, as in the format that we saw Axes of the world, is that you try to call it a game and it wasn't a game. And so at the end of the day, like that just it's almost better to just be super transparent about why people are coming into the platform. It's very clear that you're walking into the casino. Whereas Axie was like it's like a disguise as a game, but it's not fun. And if you're going to punt and you want to speculate, you'd rather go to Hyperliquid or Pump and not so much Axie.
Let's move a couple other things I want to cover. But the last thing on Pump is, what do you think about this? The thing that I think a lot of people were frustrated about is how much revenue is going back to token holders and why aren't they talking about it? And why isn't it really clear? What do you think should be the standard and the requirement? Should they be required to say, I know there's legal reasons too why they can't say, like I saw Haseeb tweeted out that 25% of the revenue. And like, I think if you're Pump, you're like, you need other people saying it. But yeah, what do you think about this idea?
I mean, let's take this from first principles, right? So if you are a company and you make revenue, and that drops to free cash flow, and you return that to your shareholders, essentially, or your token holders, right? You do that in a couple different ways. You do that in dividends, you do that in share buybacks, right? What's happening in crypto is because of the concern around securities laws, people are doing these like token buybacks, essentially, right? But I think it's very tough to, and this is part of the reason that they're not talking about it as much. It's very tough to kind of walk this line that, hey, like this is a token that, is not a security, but will accrue value to the potential holders. And people want to be able to operate, and they want to be able to reach US customers. And the pump guys are actually in the US, right? And so if that's happening, people are going to be thoughtful, and they're going to try to be, I think, at least a little bit defensive about how they think about their regulatory structure, right? And so I think that's probably why they're not talking about it as much. But to the point, if we get more clarity on securities laws and we get more clarity on, what is happening with tokens, I don't think it will be able to just, quack like a security and then but say it's a token and have that reg arb. I think you're going to have to have disclosures, right? But I think if we get more clarity on what that looks like and what those disclosures are, you'll see people be more explicit about, okay, well, now you can actually utilize this, or you can return capital to the token holder in some manner. And so I think that's a lot of it.
I think the pump guys are not in the US, right? They're like mostly in the UK and like the team, TBD. But importantly on buying the, like they have like a bunch of partners, right? If you can buy on this over the weekend, it's like all the major exchanges, it's non-US. Continues to be only non-US.
Why did they go live with Gate.io?
They're trying to go live with everybody.
Everyone.
I know,
it's Kraken, it's Bybit, it's
yeah. I think they have basically everyone but Binance, and they might still have Binance, but I haven't seen it yet.
Not Coinbase.
And not Coinbase. So because they can't go after the US customers.
Right. But you Coinbase actually.
Let's talk about acquisitions.
Can we just 1 minute on like what happens to
the
your
chain?
base case? Like what is the case for Solana now?
Yeah, let's talk about that. I think Solana is going to go through a tough period right now. I think if you look at actually I think every cycle, if you take the majors, it's like last cycle, the Bitcoin maxis were super loud, right? And Bitcoin didn't go up that much, and they got really annoying. And ETH folks had their time in the sun, and the Solana people were like the new participants. And they were really, they got noisy, but like they weren't like egotistical because they were kind of like scrappy and stuff like that. ETH people were like really loud, like we're winning and all the, L2 summer and stuff like that. And then the Bitcoin maxis were like intolerable. Now, if you fast forward a cycle, it's kind of shifted one. So the Bitcoin people are having a lot of fun. ETH people have become completely intolerable. And Solana people think that they're winning, but I actually think I think there are a lot of lessons to learn from last cycle. And I think actually Solana might be entering their season of what ETH went through the last couple of years, which is like some struggles and some trials and tribulations. I think ETH people are about to have their time in the sun, just like what happened to the Bitcoin maxis. I think Solana folks are going to have some struggles as people, I don't know, the pumps of the world, maybe try to get their own chain or something like that. And then there'll be a new ecosystem that pops up and becomes the new Solana.
I could tell you from my conversations, I think the core team of Solana is very much paying attention to Hyperliquid. And I think Pump is also a part of that, I think now, which is like clearly Hyperliquid is just lean into what Solana has always been. Again, if you look at where revenue is coming from and why these chains are being used, it's financialization. Like it's trading is the main use case, and Hyperliquid just comes in and again when we talk about Hyperliquid, why couldn't it trade like
if you talk to people, teams founders of teams who are building on Solana or folks at Solana, the thing I haven't heard them worried about something like I have about Hyperliquid.
Exactly.
I would say that I think there's a distinction to be made, which is that Hyperliquid, the perp DEX and the spot DEX, but really the perp DEX is absolutely crushing, right? And like we continue to talk about Hyperliquid kind of in that context. And then the point you're making is more about Hyper EVM, right? And Hyper EVM is pretty dead these days, right? Like I think we can all maybe feel bullish about what it might be in the future. And there's obviously some good builders there, but like there's not the ecosystem of builders that there is on Solana today. There's not the ecosystem of builders.
But there is.
But
you see the same.
There's not. We see all the deals. So,
I know, but there's so many people building on Hyperliquid right now.
There are people building there, right? I would say the quality of team is significantly below what we see on more established chains.
How would you rank Omega? If you're both investors, I think to their credit, they've been building like the ETH like what's it
the Mega
Mafia, and the quality of teams there was like actually pretty.
It's pretty good. I went to Berlin, for a pre-launch train. It's pretty
pre-launch.
good.
I mean, I was very, very impressed. How would you rank? I guess like going through a list of teams that are building on Ethereum L1, Ethereum L2s, Hyperliquid EVM, Solana, Monads of the world. Like I know it's very qualitative, but like if you were to stack rank, like where are the best? Where are the best builders? I give you my perspective, but like you see,
Rob, what do you think?
Yeah, so I would say broadly, like the ETH L2 ecosystem is, but it also depends on like what part of crypto we're talking about. If we're talking about DeFi, then we're talking about something different than we're talking about, DePIN or something like that. I will say to this broader point, I was talking to a very Solana aligned venture capitalist yesterday, and this person was telling me that they've actually been very underwhelmed by the DeFi founders that they've seen building on Solana recently. And this person actually said to me, and this is a person who's like as bullish Solana as anybody. They said, I've seen better teams building on Monad and Mega ETH pre-launch chains the last 6 months than I've seen building on Solana. And they were asking me why I thought that was. And I don't know if that statement is actually true, right? But
I would say so.
So but what I do think is true is that there is something to be said about the network effects of just being on EVM, right? Like there are just less engineers who are building SVM, but there's clearly a lot of reasons to build on Solana. There's a great core team, to your point. Like there's very good tech there that has been battle tested in the way that some of these other ecosystems haven't been. But it just seems like the whole ecosystem has gotten taken over by this barbell strategy, which is, okay, well, you have the pumps of the world and you have memes, and like that's where actually almost all the economic activity is coming from. And then there's a lot of conversation around the institutional side, and the foundation seems to be really focused there. There's a lot of focus around bringing institutions onto Solana, and the pitch has always been, don't you want to be like on a monolithic chain where all this liquidity is, right? And we have this great tech stack. And what has happened is that the institutions have said, actually, we want to control our own execution environments, right? And Robinhood is one of many that is happening. And we've heard a lot of this come up recently. There's a lot more announcements coming. And that theory around these institutions will want to be at the place with the best liquidity actually maybe is true, but you can say that Ethereum has the best liquidity. But it's really around people wanting to control their own environments. And that I think is actually the kind of the reckoning, at least from the seat that I sit in, that is happening right now, because there is this trading activity that's clearly happening, but you would combine that with the institutional side, and then Phantom going and using Hyperliquid instead of Drift or whoever.
Isn't that the argument for Hyperliquid though, which is any of these people can just one shot integrate with Hyperliquid?
Hyper EVM, that's the point.
Like you remember Jeff used to, like a year ago, Jeff from Hyperliquid would say like, we're the AWS for liquidity. And it didn't really I didn't understand what that meant at all. But now that I see like Phantom just one-shotting perps to 10 million users, like you could imagine. I mean, so I don't know. I look at 1/100th of the deals you do, but like I've seen a lot of these guys building on Hyperliquid. They're building mobile apps and they're kind of Robinhood copycats and stuff like that. It's all just on top of, what is it, HLP3 or whatever.
So they use their vault infrastructure and they use the liquidity of the order book there.
You're basically giving any front end in the world the ability to embed beautiful trading markets, right?
Yeah, and I think they will. I think it's very clear. Like Hyperliquid is going to continue to grow market share in terms of the DEX. I think the question that I was talking about a little bit more before is like, how does it go from winning that market, right, which is perpetual trading and maybe eventually spot trading, to winning like a broader ecosystem? It's not clear to me that like they are going to be able to do that, but it's also not clear they need to do that to be worth a ton of money. To your point, it's only worth $40 billion.
Yeah, but like objectively, like again, I go back to user aggregation theory will continue to be a thing. Like that's where the moat is and probably persists. Probabilistically, can Hyperliquid just become bigger than Ethereum? Because most of the users in crypto today are trading, and if Hyperliquid delivers and on the EVM and apps move there, it's kind of like the flywheel, right? Like they have the liquidity, they have the users, then builders come, they'll build good products. It's EVM compatible, and so
But I think this gets back to a little bit what we just talked about, which is what is the incentive for the best apps? The incentive for the best apps continues not to be to go build in someone else's environment, right? And so this is why you talked about Pump like launching their own chain. This is why Uniswap created a Uni chain, right? And I think Hyperliquid actually proves this out, which is that if you own the user experience, you own the full stack, you're able to go and meet the customers where they are. Like you're probably going to build a better product, and it continues to be proved.
The whole reason why we're building on Avalanche, but it's EVM compatible, and we're very focused on acquiring users that are going to be sticky and creating our own sovereign block space for this reason, right? We don't, I think like you extend that over and over and over, and the incentives will always be for builders that have a good moat and own the user experience. Just launch your chain.
Yeah. Well, and this is why Ethereum is now, I think it was David Hoffman who put out a piece yesterday about, okay, well, what's the bull story for ETH? And it's like, okay, well, what if we have native and based rollups that have more value accrual and are more natively integrated into Ethereum, and then you have easier shared liquidity across the whole ecosystem. Like that is the bull case, right? And some of the things we are saying is everyone wants to own their own environment, but like if they can share liquidity and they can share security, like maybe that they will, like that is how ETH wins, right? And it actually to this point about Avalanche, like it was the sort of the original Cosmos vision and the Avalanche vision, right? And so it does seem like there's momentum behind that story right now in a way that there wasn't a year ago to when we started this. And it's flipped a little bit on its head to a year ago when everyone was just talking about a monolithic chain.
This episode is brought to you by Geodnet, the world's largest decentralized RTK network delivering real-time, centimeter-accurate positioning around the globe. Powering technologies that enable precise navigation for drones, autonomous vehicles, first responders, farmers, and robotics, Geodnet shows that blockchain can be a truly transformative force. By delivering real-time centimeter-level accuracy, Geodnet enhances emergency response, boosts construction precision, and enables advanced navigation for drones and surveyors far beyond the limits of standard GPS. To find out more, click the link in the show notes or follow them on X. Hey everyone, Jason here. Earlier in today's episode, you heard me mention the weekly CIO Memo from Bitwise. In an industry as hectic, fast, and complex as ours, it's incredibly hard to get an easy, no-nonsense stream of what's actually moving crypto. The memo comes from Matt Hogan, Bitwise's Chief Investment Officer. He's been on the show before, and he has this amazing ability to take the most complex topics and break them down with clarity. Trust me on this one, the Bitwise Weekly CIO Memo is really worth the 5 minutes of your time. Check it out at bitwiseinvestments.com/CIO memo/empire, or just hit the link in the description of today's episode to get started. Carefully consider the extreme risks associated with crypto before investing. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Let's talk acquisitions, because Rob, I'm sure you see a lot of these. So let me just run through the list of recent acquisitions. Thesis bought Lolly, Coinbase bought Liquify, Inc. just bought Vertex. So Inc. Kraken's L2 bought Vertex, which was interesting, kind of like protocol to protocol acquisition. OpenSea bought Rally, which used to be Floor. Monad bought Portal, stablecoin infrastructure. Take us behind the scenes of what's actually happening here.
Yeah, so I mean, M&A is just been exploding this year, as you know. All of these deals that we talked about, I think they're relatively small. They're not the big, $1 billion plus deals. But what do they all have in common? They all have in common some sort of like core infrastructure use case to make using the other protocol or the acquirer easier to use and getting them closer to the customer. So like Monad and Portal, like what's happening here is now you can more easily natively onboard into the Monad ecosystem. And they also acquired a very good wallet and an incredible team. And Raj is now the head of stablecoin and payments at Monad. He's now, and no offense to anybody listening to this who has the job as well, but I think he's by far and away the most experienced person in payments, running payments at a chain, right? And I think the infrastructure at Monad is.
Were you guys investors in both?
Not in Portal. We're investors in Monad. Yeah.
Got it. Yeah. Yes, sir.
Yeah. And then you look at the OpenSea.
He ran crypto product at Visa, I think, before.
I don't know if that was his exact job at Visa, but he had a long history at Visa, and it might have been true. I'm actually not quite sure, but he's incredibly well connected. He's incredibly smart if you talk to him, and they think that payments is going to be a big part of their story, and so they get that core piece of infrastructure, and then they also get a great team. But you talk about the OpenSea deal, right? Like, this is, they're wanting to get closer to the customer. They're trying to get this wallet in place, right? You talk about, Coinbase, they're trying to add another capability to their institutional clients with Liquify, right? And so what you're seeing like capability bolt-ons. And I think that help people serve their core clients better or either get closer to those clients. And then I think the reality is there just were too many funded startups in crypto over the last cycle. There was too much venture capital. And so the winners are, building up these capabilities, and they're saying buying versus building is actually better.
So let's go there. What are the terms?
Well, I was going to say, how much of the M&A activity is a result of like tokens, or if you're a project that hasn't launched a token, you likely don't want to launch a token in this environment, and maybe you're running out of money. And so how much of it, like the buyer universe is, it's good to be a well-capitalized player in crypto. It's a buyer. Or you have like overpriced,
like Liquify. Like a lot of these teams raised, the last fundraise they did is 2022. So what does that tell you? They're running out of money. So they had a decision to make. Do we go raise a Series B/Series C, or do we go sell? So like Liquify, right? Liquify 2022, Liquify raises $5 million to build the Carta for Web3. 3 years later, sell to Coinbase. Why? First off, are these up rounds, down rounds? I guess you guys, I don't know how much you can say about Liquify because you guys.
Yeah, so we can't talk about Liquify specifically. We're investors there.
So a different route, a different one of these then.
What I would say more broadly about the M&A environment right now is it is actually really a barbell as well, right? So there's these big, $1 billion plus deals that are happening that are really strategic, right? Ripple buying Hidden Road, Kraken buying Ninja Trader. These are really, really strategic deals for what people see as the next phase of growth. And we're seeing a lot of continued interest in those types of deals among, the crypto unicorns, the Coinbases of the world, et cetera. And then we're seeing a lot of deals that are, in this, call it like sub $200 million range of valuation, where there are these teams who have built, really good products. They're really good teams. But they maybe, it's not a business, it's a product, not a business, right? Oh, yeah. And they need to go and to really increase distribution, they need to go and be, part of somebody who already has that distribution. Mm-hmm. And what we're seeing in a lot of these deals is there's actually big earnouts involved in them. And so they're saying, okay, well, here's like some amount of money. It's usually, especially for the good teams, like it's not down rounds to or it's not below like, the last round valuation, and some multiple of that, but maybe not a huge one. But then it's saying like, if you can actually take this product, plug into our distribution, and then you can go and add X amount of revenue, X amount of growth, we'll actually pay you a lot more, right? And so you're seeing a lot of these earnout structures in these deals.
Mostly earnout structures.
Yeah.
Got it. Cash or equity?
Both. I mean, it depends on the acquirer, right?
Yeah.
We're actually seeing I think you would be surprised at the amount of cash that we're seeing.
Yeah.
I heard two things. One, like Stripe, for instance, obviously acquired Bridge, and then Privy. Their position now is a $100 billion, company. They'd rather buy. So like, for instance, there's like been a fair amount of turnover now in the Stripe team. Like, so there's a bunch of people leaving and whatnot. And their position is like, look, go build it. We'll acquire you. And for something like that, if you have cash and you have all the distribution, like you're also seeing people like outside of crypto saying, okay, if we need to be relevant in the space, who do we go buy? And I think you have really well capitalized fintechs, right? That, might look at and saying, okay, do we want to build it ourselves, or do we acquire someone like a Bridge or like a Privy? And I think there's just a really good universe of companies that you could buy.
There's a rumor this week that Stripe is coming out with an L1.
Oh, really?
Yeah. I don't know if you can comment on that.
I won't comment too deeply. I would say it's a rumor that a lot of people believe is true. Yeah. So, and a lot of people that should know believe it is true.
It's a well substantiated rumor.
Yeah, right. So what I would say,
and if you think about that, the fact that they bought Privy and Stable, you don't do two massive acquisitions and then just stop.
Yeah, so I wrote an article, not to show my own article, but I wrote an article 2-3 weeks ago called "The First $1 Trillion Fintech," and I talked about Stripe. I was talking more broadly there about how payments on blockchains, when you own the account, when you own the end user, when you own, you're able to be the issuer as well, how you can basically be the whole network, right? And you can disaggregate the potentially even the Visas of the world, maybe not if you need them for auth and stuff. But you can also disaggregate the banks. And I use Stripe as an example. And I said, what's really clear here is if you take their whole infrastructure that they have now, they can own the end-to-end user experience from business banking through payments, through all their value-added services that they do. And so they could settle to a public blockchain and own everything on top of that. Or they could also just, like we talked about before, own their own execution environment, settle their own chain, right? And it continues to be, I think, clear to me that that's likely what most people are going to be doing. Mm-hmm. And so far, that the evidence is there.
To be fair, the Merts of the world, love you Mert, or the Ethereum folks of the world say they're not going to do that, because running a chain is a Herculean effort. You have to manage validators, and what about, is it permissionless or permissioned? And you see these arguments mostly from crypto native people that are focused on one vector, whether it's security, decentralization, or it's really hard to manage a chain. What would you say to that? Like, A, is that true? Because I think, like, if you were to talk to, like, launching a chain 5 years ago, very different than I think launching a chain now. Just because my view is that a lot of this tech is commoditized.
It really depends on what you want out of this tech, right? So building a new Solana today, building a new Monad today, building a new mETH today is not easy. It's very hard, right? Yeah. And doing that from the ground up and recreating the way consensus is done, right? Like, that's really, really tough. And Monad was one of the first to try to do this, like, parallelization and et cetera, right? But there are also ways to launch a L2
out of the box,
or an Avalanche L1, or use a Cosmos SDK. That is pretty simple these days. And so if you believe that one of those kind of infrastructure providers can give you an environment that works for your use case, you can do this with a team that's not that deep into crypto, or you can hire a team that's, like, pretty decent to be able to do that.
What do you think about Stripe launching an L1 instead of doing the Robinhood strategy of an L2?
I don't have the full details, so I don't know what it will look like. I think and I don't know for sure it's happening, so to say that, but I will have to see what it looks like, right? Yeah. And so my expectation is that everybody will want some interoperability with other liquidity and permissionless chains. So depending on how that looks, there's a lot of ways they could build, but I think that would be surprising to see them go in a completely isolated, like, L1 environment that they then have to build their own bridging infrastructure for, et cetera.
Although you could say most of these are just, the amount of users on chain today is nothing compared to what Stripe sees, which is like, how much does Stripe care about the current existing liquidity and user base of crypto versus what they could bring on chain? Like, it's a rounding error for them. So if they are really bought in, to your point around becoming this, like, $1 trillion fintech and owning end to end, then if you are in for the long game, you kind of say, we'll invest and we'll launch our own L1 today. And interoperability is not necessarily like that. Like, in the matrix of things where we've seen projects prioritize, like, interoperability, I think, is more of, let's tap into the liquidity of the existing user base in crypto. But there's only 30 to 60 million actives in crypto. Stripe doesn't care about that. They care about the rest of the world that's not on chain.
Yeah,
today,
and I think for payments, like, that's a completely valid point. And I've talked a lot about this publicly about my perspective that, like, payments was always supposed to exist kind of in their own isolated environments. Even I've been in, like, a lot of the people like Mert and others have responded to my posts on Twitter, like, being telling me that I'm wrong about that. And I think we're starting to see that play out a little bit. Obviously, that this hasn't fully played out, but so I agree with you for payments, but it really depends on what you want to do over time, right? Mm-hmm. So for Robinhood, I think very clearly better interoperability makes sense because they do want to do a lot of things around DeFi, right? And, like, that makes sense for them. If Stripe is simply just, saying, hey, like, we're going to do some sort of settlement here for, our broad, SMB, customer base, and we don't want to, like, offer, like, different types of on-chain yield-bearing products, and we don't want to incentivize other founders to come build there, that could definitely make sense.
Yeah. Is that co-opting the vision of crypto in some way, shape, or form? Like, are we just going back to databases and just, like, running them as such?
I don't know. There's no crying in financial markets. So.
Hey everyone, Jason here. Wanted to just take a quick break and highlight everything that's been going on in the Mantle ecosystem. In just 1 year, Mantle has seen its TVL surge by over 1,100%, now reaching $1.69 billion. That's just such a crazy amount to think about. More than 225 protocols have made Mantle their home, while the platform's eco fund has invested $38.5 million in 51 pioneering projects. through strategic partnerships with Bybit, including MNT as collateral, supporting Athena to scale, and the first Ethereum L2 to integrate Ondo Finance. They just continue to be on the bleeding edge of L2s. Be sure to stay up to date with what's going on by giving them a follow on X at 0xMantle. Special thanks to the incredible Mantle team for sponsoring today's episode. I wanted to take a moment to tell you about today's sponsor, Zenrock, the permissionless, decentralized custody network backed by Roundtable partners, 10T, Maven 11, and Spartan. Now available on Jupiter, Rock is the native token for transactions within the Zenrock ecosystem and secures Zenrock's decentralized custody network. The first application launching on Zenrock is ZenBTC, yield-bearing Bitcoin on Solana. ZenBTC will be live in April 2025. To find out more, you can follow Zenrock on X or click the link in the show notes. I wanted to take a moment to tell you about Citrea, the ZK rollup expanding Bitcoin's utility without sacrificing its security. Using ZK technology, Citrea enables Bitcoin to function as a fully programmable financial platform. Citrea is optimistically verified by Bitcoin, offering the most secure and native way to extend Bitcoin's utility to DeFi. With Citrea, developers can build scalable payment systems, tap into Bitcoin's liquidity with financial applications, and build privacy systems. Citrea is currently on testnet and approaching mainnet. To follow their progress, click the link in the show notes or follow them on X at Citrea_XYZ. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Speaking of crying in financial markets, Polymarket and UMA had some drama. So the TLD, I don't know how closely you guys follow it. Are you guys an investor in Polymarket or no?
We're pretty large investors in Polymarket, yeah.
Okay, so we'll have some biased takes only here, but that's okay. So Polymarket has basically come under the gun recently for a couple of markets, the Fordo nuclear facility. But I mean, the main one was Zelensky's suit. So there's a market that's like, will Zelensky wear a suit before July? And he wore this thing that looked like a suit.
It didn't look like a suit to me. I'm going to be completely honest, not look like a suit to me.
But
I know people called it a suit.
I actually didn't think it looked like a suit either.
No.
But,
I mean, if you have $1 million on the line, definitely look like a suit.
Yeah. But
are you telling us you got $1 million on the line?
Anyways, there's a market, and it traded like, a month ago. It was trading at like 30% chance to wear a suit, 25% chance. So he wears this thing that looks kind of like a military suit, I guess we could call it. And international media, like the CNNs and AP and Reuters of the world, said Zelensky wore a suit. And the market is now trading at zero, right? So or at 2% chance that he wears a suit or something like that. And so everyone's basically, I forget how much money's on the line. It's like $50 million.
No, I think it was 200
It was
million?
close to 200 million.
200 million was on the line.
200 million on the line that Zelensky will wear a suit. And the big frustration, I mean, there's a lot of details here, but the one liner is that people think that UMA is how they,
it's like the Oracle protocol, and that basically resolves the market.
Is the resolver here. And there are UMA whales who were also trading on Polymarket and said no, that Zelensky won't wear a suit. And those people are also big UMA whales who basically colluded to say that this should resolve to no instead of yes.
Yeah. You can contest the market, which is what happened, I believe.
Yes, that's what happened.
Like
so
you
have 2 hours after it resolves. So it resolved, I believe, to yes. And then it was, it has to be contested within 2 hours. Yeah. And it was contested within 2 hours, and then it resolved to no. Then there was another contestant, they did a second vote, and it resolved to no again. And so that's where we are today.
$240 million market.
Yeah. Wow. I mean, I think this is like the criticism that you see in prediction markets.
The official resolution criteria, sorry to interrupt, is the outcome will be determined by a consensus of credible reporting.
Right. Yeah.
That's what the official resolution. So there's the official resolution criteria gets written way before obviously the due date. And it says the outcome will be determined by a consensus of credible reporting. Yeah. So they're saying it's based on reporting. And then AP and CNN.
And this is the thing, like there is still a human element to like this mechanism, because this is the vector of governance on chain, which is it can be colluded. Like you can, on-chain governance is a very funky area where
But this is interesting. Zelensky's tailor confirmed it was a suit.
Yeah, well,
over 50 media outlets, BBC, Reuters, etc., said it was a suit.
Wait, sorry, Zelensky's tailor? Or do you just mean like there was like a...
Zelensky's tailor said it was a suit.
This is a...
He's definitely got that.
Okay.
That yes.
That's what I'm saying. I think you're now going to have to put into question, like, does he disclose if he has a position in this market? And this is the thing, like the token transparent thing. It's like you have to, like,
you think he has to disclose? You think Zelensky has to disclose?
I think everyone has to disclose. Like, if Zelensky, like, can Zelensky have a position in this market? And say Zelensky puts his entire net worth on this market, and then he wears a suit.
We talked about this a year ago, or maybe several months ago. Yeah. Will Biden drop out of the race? And we said, should Biden be? We talked about this in the roundup. Should Biden be allowed to bet on his own Polymarket?
Well, by the way, this has been the CFTC's concern this entire time, right? And so the event contracts are almost certainly going to be, and they have been cleared so far by the CFTC. There hasn't been kind of a final resolution on that. Like, there's been event contracts are fine, but there's been conversation around like political ones, or
it's as far as I know, sports betting, for instance, if you're a referee in a soccer match, you can't bet on the outcome.
Yeah, but those rules are made typically by like the leagues themselves.
Yeah, the FIFAs of the world, right?
Tim Donaghy, NBA ref.
Right. Yeah. So, but there's always been a lot of concern with the regulators that if you have these markets that are things like politics, or you have these markets that are things like
assassination markets.
Yeah, to go there. Yeah, but correct. Yeah, that it incentivizes people to do things that you otherwise don't want to incentivize them to do. Mm-hmm. Right. Yeah. I think for things like, okay, whether or not someone wears a suit, who cares, right? Like, if you want to bet on that, that somebody can go and see that market and go and wear a suit, right? That is going to be every prediction market forever. So if you're against that, then like you're just against prediction markets.
Then you're against prediction markets, right? Yeah. But how should these things resolve? Because I'm looking at the comments of the thing. There's an UMA person who said, it doesn't matter about the suit. We have more UMA tokens. I'm not losing my investment.
I think this is where...
That's a problem. Shouldn't you just have AI resolve these things?
Well, no. I mean, I don't think you can just have AI resolve them, right? I think... So there's been a lot of debate about this, right? So, okay, so should it be a centralized, kind of judiciary committee, essentially, right, that goes and resolves this? Could you have AI do it? Should you be doing it in a decentralized manner with somebody like UMA? Clearly, there are issues with UMA because the token is not trading particularly well, doesn't take a lot of money to go and influence the resolution of a market that has actually more money on the line than that token itself. Mm-hmm. And there needs to be some sort there needs to be some sort of change in how you use these types of resolution or these Oracle protocols. That said, I think it's also like we would have this type of drama essentially if it was just a centralized kind of judiciary committee who ruled against people that they thought was unfair as well, right? Yeah. And so you've seen a lot of debate around that, mostly coming from VCs who have different bags.
Because Kalshi does it in a very centralized way. Right?
Yeah, so I mean, they do it in an entirely centralized way. They have somebody internally who takes a look at it. I think if I actually take a first principles look at this, I think it's pretty clear that being entirely centralized is not the right way. Being entirely decentralized is not the right way. Some sort of hybrid solution makes the most sense. But you also you need to be really, really thoughtful about how you define the resolution. Yeah. That is the most important thing, is being thoughtful about how you define the resolution.
That's a suit.
I don't think
that's a suit at all. I think that is like military.
You think that's a suit?
It's a suit.
Have you ever worn a suit that looks like that?
Yes. It's like a jacket suit.
It's like a barber jacket though.
Yeah.
Okay. Well, but to the broader point, I think there's clearly a lot of innovation that still needs to be done on this side.
Dispute resolution is the heart of, and I do agree, as much as, again, Parify is, I think, the largest holder of Polymarket, so like there's bias on both sides. Dispute resolution is key. And the interesting thing, a lot of it has been dancing around like CFTC stuff, but like if we get more, this is the benefit of why like clearer regulatory environment allows us to explore different possibilities as a hybrid situation, right? And I don't know. I think you could leverage AI. You could have a independent committee for each market, and then, or maybe you set a precedent that that's a suit, and then going forward, every tailor.
Well, part of the reason, by the way, that this was deemed that way is there was precedent, right? And so there was another market
Right.
that where something similar was worn that was deemed no, right? And it was a much smaller market, and so it didn't have all of this hoopla around it. And so that is actually part of what happened here. I think just what's very clear is this is a area that prediction markets are now, they're not going away, right? Like, Polymarket's doing over $1 billion a month of trading volume. Kalshi is doing.
I agree. These things are going to 100x in the next 10
Yeah,
years.
Kalshi is doing 400 million a month or 500 million a month, right? And it's very clear that these are the way that, or at least a way that consumers want to get information. They are taking information from that. We actually invested in a kind of a different point. We invested in another company where they run polls, and you have to link like crypto wallets and your bank account to it, and so it tells you how much money you have. Yeah. And so, but there's this idea that like putting your money where your mouth is a way to parse information better, and we're going to continue to see that idea take off and continue to be a main part of the mainstream conversation. So these aren't going away, and I think we'll just continue to have more innovation and tweaks that will help get us to the right place.
And you send that further, it's a feedback loop where you can also now incentivize and change behavior that you might want to see for political officials. It's like it's 200 million online. Zelensky now has an incentive to wear a suit if his family members have exposure to it. And is that a bad thing? Maybe not. Maybe. So like prediction markets, when I was talking to Shane in the very early days, the uber bull case of prediction markets says that they influence behavior, hopefully in a positive way, not in a assassination market is the ugly part of prediction markets. But anyways.
Rob, I'm looking at Twitter. You guys just led or co-led or participated in Agora?
So we led the seed.
And
then
Paradigm led the Series A.
Yeah, and they led the Series A. We actually upped our ownership in this round, so we're super bullish.
Why are you so bullish on this?
I mean, have you met Nick? He's an incredible founder. I think there's the macro point, which is that.
What does Agora do?
Okay, yeah. So going a high level, Agora they're a stablecoin issuer. But they are both stablecoin issuer for their own stablecoin called AUSD. They also do white label issuance, and then they provide basically the full stack of APIs you need to do alongside issuance, like other types of payments, on ramps, off ramps. They're partnering with a wallet provider to basically make it extremely easy and a one-stop solution to offer stablecoin finance, right? So that. Just that theme and that idea is something we're extremely bullish on. And then combine that with Nick and Drake, the founders, who we think are just best in class in the market. We continue to be extremely excited about what they're doing. We led the seed in what was a very kind of hot round a year and a half ago. And then we have been so impressed with how they've operated for the last year and a half that we upped our ownership in this round.
Nice. I agree with Nick. He's a fantastic guy. I've heard you also tweet about like this rapidly evolving state of stablecoins and large players coming in, and you were at the Goldman conference and everyone's talking about stablecoins. How do you invest behind something? And, we talk about distribution, how important that is. Like, what is the defensibility of this business model? How much of it is going to be a function of them really just going fast and owning a category? And when you have competing factions, everyone's trying to get into the stablecoin market. Like, how do you see that? Right.
So everyone is going, this harkens back a little bit to the chain conversation we had, but everyone is going full stack, right? When you have a technology that makes it much easier to operate at, call it, bare metal on the tech stack, but also operate directly and face the consumer, and the middle gets a lot easier. Like, you need to be able to offer a lot more, right? And so, kind of what we've seen from Bridge, right? What has Bridge done? Bridge was an on-ramp, off-ramp business, right? Now, all of a sudden, Bridge is a stablecoin issuer, they're a card issuer, they're a virtual account company, and they do like cross-border payments, right? So now they're doing basically everything, right? And they're continuing to offer new capabilities. And so what we're seeing from a lot of these stablecoin issuers is that, and a lot of the stablecoin companies generally, is that they're offering a wedge product, and they're saying, this is the first one, we do this thing really well, and then as they grow, as they make more money, as they raise more capital, they're doing everything else, right? And they're trying to own a certain part of the market. And so it really becomes there's a tech game there. Like, reality is, and I was talking to someone about this yesterday at one of the chains, most of the like stablecoin APIs in the space are actually really terrible. Like a lot of the call it, first wave of stablecoin companies have just built like really awful APIs for some reason. And so there's a lot of opportunity to build, call it a better APIs and a better tech stack. But beyond that, you now have to go and own the end customer as well. And you have to dog food your own stablecoin.
Yeah. We've been pitched by like pretty much everyone under the sun about like,
which stablecoin
are you going to use for inversion? Go and acquire. It's something we actively think about, right? I mean, like for us is speed of an execution. Like we are of the mind that a lot of values will be created by stitching together best-in-class products that exist in this space. So we don't pretend to do like everything out of the gate because we're focused on acquiring companies where we feel that we can do it in the best way possible. Like de-risk that part of the equation. Like that's a hard part. Who we use on the back end, we are clearly relying on a number of infrastructure providers, Avalanche on the settlement layer and their stack. And then we can have like, there's middle parts of that layer.
Yeah.
And it all will come down to what we do initially might not be the case as we scale. And just will depend, right?
Who pays who in this game? Because I know if you're a chain and you want USDC, that's changing a lot right now. Yeah. And I think Agora is actually pushing that change. Because if you're a chain and you want USDC to come to your chain, oftentimes you have to give them a big grant.
$20 million?
$20 million, yeah.
I mean,
so all of the stablecoin issuers, all of them are being paid to deploy on chains.
Right.
So
there's a lot of money.
A lot of money.
$30 million.
Yeah.
Like
so
Codex, for instance, we're both investors. You guys can share me that deal.
Yeah.
Appreciate it. But they launched like USDC natively there, right?
So they launched USDC natively on day one, and they're the only chain to on day one have USDC natively, which is a really big deal for that deep liquidity. They're a little bit different because they have a deep partnership and relationship with Circle, and there's
is the Tether has Plasma and a couple of
and Circle has Codex. And so there's something happening there that's a little bit different than what's happening more broadly. But what's happening more broadly is that there is, you're a new chain, you want to have USDC. USDC is asking for, tens of millions of dollars for to Jason's point. Or now, USDT isn't really natively deploying anywhere else right now, but USDT 0 is natively deploying places. And same thing, they're cheaper than Circle, but they're asking for money, right? But you go down that list to like an Agora or an M0, which are kind of the next two, right? Like they're also getting paid. They're just getting paid less money, right?
Yeah.
But
and they'll share more yield.
But and this is what's happening. And so part of these agreements end up being that so especially for Agora, a big part of their business model is that they share most of the NIM, also like a Paxos USDG shares most of the NIM with the end user, the end customer, or the protocol. And so so they get paid to come on, but part of that is incentives, and then they're all giving incentives to the end user, the retail customer.
We'll see Jason looking at his
I'm calling the Uber. I got to be in Midtown in about 20 minutes.
That's all right, man. We'll keep rolling. I mean, you're basically on your way out anyways, right?
Thanks for the guest spot.
I got to call it.
We'll make this a live stream. We'll be here for the next 24 hours.
I got to call it. You know what I was just looking at is Revolut is raising at a $75 billion valuation.
Secondaries at 45.
And
did you buy some?
I'm thinking about it. I think they've done some really good stuff.
Yeah, great business.
No, the $45 billion was last year.
No.
Oh, you're seeing it right now?
Secondary, primary is at 75. Secondary, most employees are selling at 40. There's a big discount.
So the mark is 100. The important number is 150 billion. So their founder did a deal very similar to what Elon did, which is he doesn't get paid that much or something like that until they hit 150 billion valuation. Very ballsy.
I believe him.
Shit, maybe we should do that for
inversion.
Yeah. Until 100
it's
billion.
Great. He gets an extra 10%.
If we're the largest chain, then you unlock certain. That's a great structure actually.
Yeah,
I like that a lot.
All right, that's the pod.
Talk to you
Rob,
about
thanks for coming on.
We're off the record.
All right, you guys can keep going. I'm out of here.
On background.
By the way, content recommendation. I'm listening to there's a guy Barry Diller.
Yeah. Oh yeah.
Barry, I'm reading. I'm actually almost done with Barry Diller's book. Crazy. If people are interested in, so Barry Diller he launched Fox TV network. He launched ABC Movie of the Week. He was CEO of Paramount. He now runs IAC, which owns Expedia. Basically owns all the dating apps, Tinder, Hinge, all those things, Match Group. So anyways, good just memoir of Barry Diller's book. But the thing was he was gay at a time when it was tough to be gay. So it was a very good memoir. It's called Who Knew?
Yeah.
Okay.
Okay, really I have two. no surprise, the Founders Podcast I love.
That's great.
2 really recent episodes that are big, amazing. The Ferrero Rocher founder, Michel Ferrero. Amazing story. The second one is the Michelin brothers, like the Michelin tires.
Oh, interesting.
Unreal.
Does it talk
story.
about how the tires became the restaurant guide of the world?
Yeah, like the Michelin guide and how they went about like the marketing genius behind it. Like the Tour de France going on right now. Like it was started by L'Auto, which is a newspaper. Guess who owned the newspaper? The Michelin brothers. Why'd they own it? Because, for them, it was like getting people to move because they wear out the tires and they sell more tires.
On the pipes, on the media, baby.
And I just recently started listening to Shane Parrish. I mean, great newsletter.
Yeah.
There's a podcast on Anna. You know this, the Condé Nast.
Anna Wintour?
Yeah, amazing podcast. I mean, she's just an absolute savage.
Yeah, she's a savage.
She's just like,
All right, I'll end with one.
Okay.
Since I really fumbled this last time when we were
I was
on.
gonna say, Rob's getting better.
He didn't have a good. I didn't listen to
Came
the
prepared.
Oh, nice. Rob's been prepping.
He really wants a job.
Yeah.
He's Rob, you looking at notes?
Well, I like when Rob earlier in the episode is like, I read a really good piece on stablecoins. I wrote it.
Listen, content recommendation, my piece.
Yeah.
So I'm rereading a book called House of Leaves, which is my favorite kind of sci-fi like horror book that I've ever read. It is like a descent into madness. It's more lighthearted than all of this stuff that we've talked about. But if you want a weekend read, you're out in the Hamptons, right? This is the book.
Are you going to Hamptons this weekend?
Next weekend.
Oh, look at this shirt. I mean, he's
That is a Hamptons
ready. He's
shirt.
ready to go to
That is a
Hamptons right now.
Hamptons
He's in
shirt.
Capri or the Hamptons.
You're
What is
invited
that?
though. You're invited though.
Oh, thank you, y'all.
Both of you.
I'm flying out tomorrow's. It's like the person's leaving. It's like, you're invited.
You're invited. Yeah. All right, folks. Thanks for listening. Have a great rest of the Friday. Great Saturday. We will see you next week.
All right. Thanks, guys.
Cheers, everyone.
Cheers.